Coming up in today's show, stocks continue to rally on the back of strong bank earnings, retail sales come in lower than expected, Microsoft rips higher on a new AI product, Tesla earnings due out tomorrow, gold rallies up to a 6-week high, and FOMO starts to kick in across the market. Hey, what's up guys? Welcome back to the Click Capital Daily Show. I'm your host Jared, and I've got a good one for you today, so stick with me right through to the end. I'm going to take you through all the latest news, data, and charts from the markets today. And so we're getting into the full swing of Q2 earnings season. We had some good results out today from Bank of America up over 4%, Morgan Stanley as well. And overall, pretty bullish across the board. Microsoft up almost 4% on the back of a new AI product I'll get into later. And once again, weakness in some of the defensive sectors like utilities. And so after Bank of America and Morgan Stanley reported today, we've now got about half a dozen of the biggest banks out there that have given insights to their business and the economy. And they're pretty much all saying the same thing, that their consumer and the economy is resilient, it's in good shape, and all of this is adding fuel to the growing sentiment that a recession may come later than markets had initially predicted. The big one today was Bank of America, and they reported net income was up 19% compared to a year earlier. And the CEO said today we continue to see a healthy US economy that is growing at a slower pace with a resilient job market. Although Morgan Stanley reported a profit drop of 14% from a year ago, and the CEO said the firm delivered solid results in a challenging market environment. He went on to say the quarter started with macroeconomic uncertainties and subdued client activity, but ended with a more constructive tone. We also had results out from Charles Schwab. They said their deposits dropped 31% during the second quarter, and net income also fell 28%. And just a quicker look at the price action in the financials today. Here's the financial ETF XLF, finished up a bit over 1% to multi-month highs and making back that ground we lost from Silicon Valley Bank bust. And down to those stocks that reported today, they did really well. Technically speaking, Bank of America up 4.4% on volume. Even though Morgan Stanley's earnings decreased, the market loved the report, up 6.4%. And same deal with Schwab, the market really loved that, up 12%. And this was a stock the market was really worried about back here after Silicon Valley Bank. There was a lot of fear, uncertainty, and doubt being thrown around about Schwab. However, if you're watching my channel during here, you knew that I was sharing with you that the Schwab insiders were actually buying their stock, and their numbers were showing that it wasn't that bad. They were losing deposits. However, a lot of customers are shuffling those deposits into higher paying money market funds and such. And so it had been really good value, and probably will be when we look back in a couple of years as well. And so back down here after Silicon Valley Bank, our stock fair value indicator has always had the fair value on Charles Schwab somewhere in the low 80s. And the stock actually got down to the mid 40s, so it was quite cheap. And even today, we've still got fair value at $88, which is where it was about at the start of the year. So it looks like the market shrugged off all those worries, and it's kind of adapted to this new normal environment. And technically speaking, the price action looks really good here. Also out today was retail sales across the economy coming in slower than expected. And so the previous reading for year over year retail sales growth was 2%, and month over month was 0.5%. Consensus for June was 1.6%. We came in lower at 1.49%, and month over month was 0.5, came in a bit lower at 0.2. And for June, the start of summer, that's not really a good sign for the economy when the consumer's supposed to be out there and spending, enjoying their summer. Industrial production came in lower than expected as well. It's actually contracting month over month 0.5%, and year over year 0.4% contraction. So industrial companies are not producing as much goods as they were last year. However, that doesn't matter because number go higher. And price action rules all. And we can see this growing optimistic sentiment from Charles Schwab, CEO, who says bullishness among retail traders is rising with buy orders 20% higher than sells. And he said that because cash realigning fell to the lowest level it's been in many months, part of that is because clients are moving back into the equity market. So that's why they're losing deposits. People are coming back into stocks. And the higher we go, more FOMO is going to kick in. And we can see that with a sense of urgency as investors are rushing into equity mutual funds. And we can see that in this chart here, with it moving up strongly the last couple of months and getting back to those levels late 21, early 2022 before we fell off in the market. And there has been good reason for that rally. Inflation has been falling faster than expected, which is what the stock market really wants to see, because then the Fed can stop hiking rates, and then the earnings yield on stocks becomes more attractive relative to bonds. And we can see that in this chart here. So the yellow line's got the CPI inflation, and then this blue line is what the futures market had predicted inflation to be a year earlier. So you can see now we've got CPI at 3%. A year ago, the market was still expecting inflation CPI to be around 5%. So that repricing has led to a bit of a rally in stocks, which now might be getting a bit exacerbated with over-optimistic sentiment. And we can see that in the AAPL Investor Sentiment Survey, with bullish readings now in the 40s, and we're recently up 46%, which is the highest it's been since late 2021. Just before the market peaked out. We can also see that in the NAAIM exposure index, which reflects the overall sentiment of active investment managers, and that too is breaking out to levels not seen since late 21. And things are looking so good, we've even got Goldman Sachs saying the yield curve inversion is different this time. They've even said stop worrying about it. However, let me show you the other side of the coin and give you a balanced view and let you decide. We've got things like US corporate debt defaults in 23 have already surpassed last year's total. So far, 55 US firms have defaulted on their debt in the first half, a 53% increase from total defaults. And this is coming from Moody's, which has also said global debt defaults could keep surging as financial conditions continue to tighten. We've also got the manufacturing sector continue to be in a recession and contracting, just as we saw with those latest industrial production numbers. And don't forget the problems that are going on in China, especially their property sector, with one of their largest property developers, Evergrande, reporting the mother of all losses, $81 billion over the past 2 years, and that's US dollars as well. We've also seen a drop in global financing this year from the higher rates. Even the boom in AI hasn't been able to stop a 48% drop in venture capital funding. And don't forget, while we're seeing earnings beats, the bar is set low. So just because companies are beating on their earnings doesn't mean they're growing their earnings. The fact is, a lot of them have sales flagging and profits are decreasing even more, with analysts expecting overall S&P 500 earnings to fall 8.1% from a year earlier. And that's setting the bar low, so it probably will come in higher than that. But even still, if we come in at 6 or 5% drop, that's still a contraction and recession in corporate earnings. And we can see that in this chart here, because inflation actually gives a tailwind to corporate earnings. And so inflation falling also has the same headwind on earnings. And if you find all these mixed signals confusing, don't worry, it is. And like this article says, the best thing we can do is just diversify and prepare for any scenario that should unfold. And if you want to see strong signs that the AI buzz is still alive and well, look no further than the price of Microsoft shares today, as they added a whopping $154 billion in market value after they announced their new $30 a month AI subscription. And that allows users to have AI capabilities integrated into its Microsoft Office platform. And just look at that price action in Microsoft today. That is still super strong after we've already been in this parabolic rally. Up 4% today for a company already worth over $2.5 trillion. And on this huge volume, 64 million, almost triple average daily volume. So right now, this thing seems unstoppable. Also, the big one out tomorrow will be Tesla earnings. After close, and they did come in with good second quarter deliveries above expectations. Analysts are looking for their margins, which have recently come under pressure because of them dropping their prices to help move inventory, which has actually worked really well for them. And so there's a bit of news out across the media today saying their margins are under the pressure, etc., etc. However, like everything, you got to put it in context. Tesla's gross profit margins are already double the industry, so they have room to move on their pricing and margins. And even if their gross profit margin comes down to 20% or 18-19, they're still above General Motors, Ford, and Toyota. We've got a falling US dollar and treasury yields with it, which is helping give a boost to commodities like gold. And we can see that on the charts here today, getting up to almost $2,000 an ounce on above average volume. This is this big resistance zone of its all-time high, which we almost got back to in early May, with it being $2,089 an ounce. And like I've been saying on this channel for a while, I think we're going to break out to all-time highs any week now and keep going. And I wouldn't be surprised if we finish the year well into the mid-2000s an ounce. Fed fund futures are still saying we're definitely getting a hike this time next week when the Fed meets. However, the real one still a little bit up for debate is whether they hike again in September. Right now, the market's saying 85% chance that they won't hike. And that's what's causing bond yields to fall and stock market to get excited, and it's also giving a little bit of tailwind to commodities like gold and crude. Pretty busy day on the options market for a Tuesday. Coming in above average, 40.3 million contracts traded and another huge 61% of them calls. Over to look at the dark pool index, still pulling back somewhat and diverging from this market. Same with corporate insiders, we can see their purchases have been trending down since May, getting down to record lows. Back into the charts and we continue to grind higher in this parabolic price action, with both the S&P 500 and the Nasdaq finding new year-to-date highs today, and the winner again was small caps as we've seen that improved breadth in the market. International stock indices aren't doing so well, with half of them below, half of them above their 50-day VWAPs. Volatility still at rock bottom with the VIX at 13.3. And breadth across the market is continuing to hold up, with some improving signs coming out of stocks making new highs. 177 on the NYSE and another new multi-month high today on the Nasdaq, 138 stocks making new highs. There's the growth versus defensive sectors spread continuing to tick up, high beta stocks continuing to move, and the Russell 2000 continuing to defend this support from the SPY. Credit spreads continuing to improve with high yield moving up versus treasuries. Inflation expectations continuing to come down a little bit. Got the 10-year sitting just below 380. TLT sitting right at its 50-day VWAP. High yield bonds floating with this multi-month high. Dollar trying to put a bottom in here just above 99. Bitcoin continuing to peel away from this big resistance zone. Commodity index as a whole continues to tick up and push against multi-month highs, and strength across the board in commodities. There's crude and agricultural commodities still on an uptrend. And over to stock sectors, and here's a look at the cannabis ETF MSOS, which I've been long in since 548 a unit. We've had a bit of a pullback here, just under the 50-day VWAP, now on low volume. And this is a highly volatile sector fund, and it's really going to depend on whether Congress and the Senate can get the Safe Banking Act pushed through to Biden's desk to sign and kind of pave the way for federal legalization of cannabis and legitimize the industry and allow these businesses to stop dealing in cash only. And more importantly, should open the floodgates for the big institutional money to come in. And so that's still not a given, but I still think it's an asymmetric bet here, because if that does go through, we could easily see north of $10 a unit here. If not, we may indeed break down below the low fives here. We'll just have to wait and see how with the election November next year, if Biden comes good on his campaign promise of legalizing cannabis, even if Safe Banking Act doesn't go through in the next month or so, then maybe sometime next year they get it done and we could get the pop then. There's the AI sector, bots ETF breaking out to new year-to-date highs. Even the overvalued stuff in ARK is doing really well. Another sign of improving sentiment in the market is the IPO sector ETF, showing demand for fresh equity is increasing. Though softer retail sales didn't seem to hurt, the sector ETF today finished up 1%. There's gold miners getting a bid on the back of the price of gold. Regionals had a good day, breaking out multi-month highs up 4.2%. Industrials and transports still doing really well. And in another confirming sign of the rotation into growth in the market is the defensive sectors. Healthcare, staples, and utilities continue to trade weak compared to the rest. Another sign of improving market sentiment is BlackRock, holding on to its earnings gains with really strong price action. Another tick higher in JP Morgan. Apple was basically flat today, but still looks poised to break out. We've already covered the winner of the day, Microsoft. Google had a little pullback, so did Amazon. NVDA is a few points away from breaking out to new all-time highs, and Tesla rallied up 1% to $293 a share going into earnings tomorrow afternoon. And this will be the big story tomorrow after close, and that should influence the market a lot, especially if we get a big move out of Tesla either way. Meta's continuing in this tight parabolic price action, and big jump up on Netflix today, up 5.5% going into their earnings tomorrow as well. So their password sharing cracked down, and their new ad-supported tier appears to be paying off for them really well. Over to meme stocks, a little mixed out there, still some pretty good price moves. Carvana was up 9%, even though we're down after hours, after they just brought forward their results from August to today. It looks like they may be reporting them later on tonight, and it's obviously got the market a little worried here. There's Nikola moving up 8% after we got that surprise news that they got an order for 50 trucks. And as a look at those battered stocks, AT&T down a little bit today, but we've got a little bit of a pop-up in Verizon. And we've got a lot of the regional banks reporting next week and doing really well today in price action. PacWest up 8%, Western Alliance as well, and some pretty good price action across the board in the regionals and the big banks. And like most other sentiment indicators out there, our S&P 500 oscillator as well is back into overbought territory above 60. And looking back over the last couple of years, this is the most amount of clustering we've seen in the overbought territory on the market. And we can see that in the price action. Even when we rally, there's always a lot of dips and pullbacks. But over this last couple of months, the market has pretty much just gone straight up. And that's why, regardless of the fundamentals and macro backdrop, doesn't matter even if the market has a PE of 1,000, you got to pay attention to price action first and foremost. And when you see these tight parabolic momentum moves, that is very hard to fight, and you kind of got to just let the market do its thing. As long as there's no nasty surprises, earnings keep beating their low estimates, and we keep seeing signs of inflation coming down. Until we get a nasty shock and surprise, this strong short-term price momentum is likely to persist, and the market's likely wanted to go up and test those all-time highs at 4,800 on the S&P 500. And that's a wrap for today. Thanks very much for tuning in. Hit that subscribe button if you haven't already. Appreciate all you guys who support the channel every day. I'm always interested to hear your comments on the market, what you think, anything I may have missed. And as always, the market keeps it interesting for us. Alright guys, see you again tomorrow for the big one, Tesla earnings. Take care. Cheers.